Good morning, traders and investors around the world, and welcome to Friday's unemployment edition of premarketinfo.com, where we prepare you for the most important hour of the day. Well, Dennis, it's the much-awaited January unemployment number. The market seems to be in a consolidation phase the last couple days.
Yeah, the market's holding up here. We're up 2 points here. Overnight, we were actually down quite a bit, but then we have rallied up. So we're holding up and being up 2 points here going into this jobs number, Joel.
Okay, the current high stands at 1276.50. That's just shy of Friday's high, and then also Thursday's high, and then that 1280 level that we touched earlier in the week. If that 1276.50 holds as the high of the day, we have a downside target at 1257.50, which would put us just below yesterday's low. The current low stands at 1266.75. Really don't have a relevant number in that area. If that number holds as the low of the day, we have an upside target of 1287.75, which would take us above those October highs. Right now, in order to stay positive, get up to challenge that 1280 level, I'd like to see the market hold this 1271.25. Just quick note, folks, we had two closes on the nose at 1273. We had Tuesday's close at 1272. Very rare for the S&Ps to do that. Major area of support as we stand right now, this 1272 will be the swing number of the day. Moving on to Apple Computer, Dennis filled the gap from the October earnings miss. Tried to approach the 420 level. Got as high as 418.55 with a close there at 418.03. Not much in the book here, Dennis, going up to the all-time high close at 424.81 and then the all-time high at 426.70. Important to note here, support at Thursday's low at 1267, but the major support stands at Tuesday and Wednesday's low at 409. Have you been on the Apple train there, Dennis?
No, I haven't been, Joel. I can't bring myself to buy the thing, but it just keeps marching up though here, up $4 more. Like we said, there wasn't much above the 412 area. We started to get above there and we really start to move higher. I really don't see that much until that all-time high at 426.70. Would not surprise me if it touched it or even tried to take it out. But just keep in mind here, when you have stocks doing a slow climb like this, for the last 2 or 3 weeks, there's a lot of people along this trade. So you can have vicious washouts where all of a sudden, I don't know where it's going to happen, but all of a sudden the stock could just fall $7 or $8 or $10 in a day and be like, what happened? Well, you get that shakeout of the longs. So I think that eventually is going to happen. I just don't know when that's going to happen. But 426.70 looks like where it wants to go and test, Joel.
Okay, moving on to our next component, ExxonMobil, consolidating as well, like the SPUs the last couple days, really running into problems here at 86, Dennis. 85.95 was Thursday's high. You have two closes at 86, and then Wednesday's high at 86.15. So someone's trying to sneak out here at 86, selling some stock. They're doing a pretty good job of it. If we can get above and hold 86, I'd look for a test of the 86.67 level, which was a high earlier in the week. Coming down yesterday, Dennis, you were right. That 85 level turned out to be pretty good support. Snuck under there to 84.92, so that would be our target on the downside with any shorts we have this morning.
And that's what happens a lot of times when you get a hard number like 85. It'll take the number out by 7, 8, 10 cents to shake out those people who have bought it off that number and then turn around and rally. So you always want to give these numbers a little bit of play. They're not perfect numbers. It's just guidance to where, you might see a low come in or where, you might see some buying pressure eventually materialize. And that's what happened yesterday, obviously 84.92 and that 85 level overall pretty much holding. Still, I'd be a buyer down there if it was to come back down there again. And like you said, that 86 to 86.5 area, obviously is starting to come into play as resistance.
Okay, IBM winding itself into a little tizzy here as well, running into a lot of problems in the 186 level. 186.33 was Wednesday's high, so that's going to be our major resistance. But before you get there, you have you have Thursday's high at the 185.02 level with the close on 184.66. 183.10 was yesterday's low. That's going to be good support. Below that, I don't see a whole lot until the 9-day low of 181. This stock just kind of been consolidating. Really hasn't been rattling like a couple of the other tech stocks, Apple and Microsoft, for example.
Yeah, this one's been quiet, Joel. It hasn't really participated, right? Because tech has had a pretty decent couple of weeks here, and IBM has not really participated, even with a kind of a breakdown day yesterday. So in my honest opinion, I think rally's probably to be sold in this one, just because it's got poor relative strength. It's hard to find the numbers. Like yesterday's high could use as one number as 185 or even that 186. I'd pick on the whole numbers a little bit on this maybe. But this is a stock I definitely wouldn't want to be long just because the relative strength has not been good.
Okay, Mr. Softy, Dennis, really a 2-3 day run there in this stock, getting up to 27.73. Really didn't have too much problems with that 27.50 area. It hit it in the morning and then pulled back. Made a low at 27.29, so that would be our good support. Really looks like it's kind of gearing up here to challenge $28. We get a good number here. It's basically had a 3-day run. It's taken us from 26.50 up to this level, 27.50, and actually closed above there.
Yeah, heck of a run there, Joel, for the stock. The 27.5 was the sizable. There was a lot of sellers there in the book there at 27.5. So what happened is it kind of got caught up in the HFT tractor beam, pulling it through that number. I actually did try to short it there at 27.45, and I got stopped at 27.52. So I lost a little 7 cents there, so not too much damage. But the stock does look like it's moving up to $28. That looks like where it wants to go. We did cut through there to 28.10 there. We go back. I'm just looking at those highs back in July. So it did cut through the 28 a little bit, so that number's not a perfect number. But I expect that overall area to give some pretty good resistance, especially considering it came from 26 just earlier in the month.
Okay, moving on to our next component, Chevron Corporation. A little weak yesterday. Along with Exxon Mobil. After making that all-time high earlier in the week, 110.99, we've kind of pulled back and made a couple lower highs. Keep an eye on this 109.54, which was Thursday's high for initial resistance. Coming back on the downside, 107.97 was Thursday's low. That would be your first stopping point on the downside. Got a little bit here at 107.50, but if that 107.97 level can't hold, I'd look for us to test the 5-day low here at 106.18.
And the resistance still, the major resistance obviously being that 52-week high on 110.99. We talked about that sizable offer at 111, which is why those high-frequency guys like to lean on that. So they were sitting up there in the 110.90s. I think the same thing again here, Joel. I think if it was to go in rally mode, it's only, $1.80 away from there. So that is doable for Chevron. If it goes up there, I think you see some major sellers in the high 110s.
Okay, J&J, Dennis, the old rounding top there. $66 is like the Rock of Gibraltar here. We got up only to 65.60 yesterday. Made a high early in the morning and then cracked that $65 level, getting to 64.83, which is just above our major support at the 9 and 10 day lows. Got a boost near the close, settled up there right near the high. So, if we can open up in that area, that 65.60 area, opening up into good resistance. If you get through there, of course, we have the major resistance standing at 66. Coming back on the downside, like I said, 64.83 Thursday's low and buffeted by that 64.60 area.
66 is just huge on this, Joel. High frequency resistance all over the place in the 65.80s and 65.90s. So expect, major resistance even starting at around 65.80.
Okay, Procter & Gamble. Here's another stock still kind of consolidating. Really tight ranges up here. Can't get through 67. Made a little bit of a run at it yesterday. Well, not as much. 66.65 with the 66.52 close. Currently trading up smartly 44 cents. Dennis, is that a straight trade or upgrade or?
Straight trade. Stray trade.
Okay.
Yeah, just 100 shares. So it's offered 66.88 there now. So just a stray 100 shares there, I think, Joel.
Okay.
But
well,
overall, they're on. Oh, yeah, go ahead.
Go ahead.
Over there, I was just going to say that 67 number again still comes into play here, Joel. 66, not 80s and 90s. It's the same story as Johnson & Johnson. These two stocks are trading virtually identical here in the last little while. Put the charts on top of each other. They look very, very close. But same story. We've got, major high frequency resistance in the 6580 or 6680s and 6690s. So that's, probably where you want to be looking to sell this thing. If it opens up in that 6680 area, I'd expect you to find some pretty decent resistance.
Okay, AT&T, decent day yesterday, pretty much consolidating here at the 30-40 area. Took out Tuesdays and Wednesdays lows and went back, went as low as 30.18, but popped up to close at 30.40. Hard to call this one. You're just running into a wall here from 30.50 up to Wednesday's high 30.68. And just looked like it was going to break down a little bit yesterday after taking out that double bottom at 30.30. It popped. This 30.18 level can hold. Well, is it not holding in the pre-market, Dennis, or is that another street?
I got a ex-dividend, ex-dividend, Joel, so
okay.
44 cents AT&T. So the adjusted close here, just to jump over there, the adjusted close is 29.96. The close is not 30.40, it's now 29.96, the adjusted close for the dividend. So it's trading up 4 cents actually at $30 there. I know over there it says it's trading up, but it's only trading up 4 cents at $30 here, Joel.
Okay, just one thing to note, when a lot of short-term dividend players are buying the stock for the dividend, they got the dividend now, so that 30-40 is going to be huge, probably even before that 30-30. Is the people that bought the stock for the dividend only are going to try and get out even on the trade. Moving on to our next component, GE, Dennis. GE is winding up here, buddy. It's going to either break out above 1860, which was Wednesday's and Thursday's highs, and get up to that coveted 1904 to 1914 level, which was our highs back in mid-July, or the stock already trading above its October highs. And then you got a triple bottom, Dennis, 1823 to 1829. So looking for it to go one way or another, trading up in the pre-market, maybe in anticipation of a good number. If we do open up here, it comes back to 1860, it's going to be good support.
Yeah, that's getting a decent lift here this morning, 1868 after closing at 1855. So trading above yesterday's high here right now in the pre-market. Kramer on his Mad Money show was
okay.
Loves the stock. He'd be a buyer here, and he likes it just for the dividend, mainly for the dividend play. So he said it was his second favorite Dow stock. So I think that's why it's getting a little bit more relative strength than maybe some of the other S&P components. But those can have follow-through moves, so I wouldn't be surprised when the open some more traders come in just because of what Kramer said. So that 19 number could come into play today here, Joel. If it does, that should be some pretty good resistance.
Okay, and moving on to our final component, Coca-Cola exhibited a little weakness yesterday, getting down to 69 and a quarter, taking out Wednesday's low. Recovery on the day settled at 69.37. You're going to have resistance all the way up from Wednesday's close, 69.70 up to 69.87, which was Thursday's high, and also in that $70 area. So Coca-Cola is starting to get thick around that $70 on the upside. Below the 69 and a quarter level, I'm looking for the December 22nd low of 68.89.
Yeah, it really is, Joel. It's starting to get thick up there. Even 69.90, I'm seeing a little bit of size start to form there. So expect yesterday's high 69.86 to give you some pretty decent resistance there. I'd probably be a seller in the 69.80s. This is a lot of these defensive stock charts are starting to look the same. They're starting around back at some old highs, and I wouldn't be surprised, if the stock eventually starts to come down, a little bit further.
Okay. Just overall, you do have a lot of stocks trading over their October highs, as well as some of them challenging the July highs. The SPUs have not confirmed this move yet. Perhaps a good jobs number will confirm that. Keeping a real close eye on this 1280 on the upside. We're going to take a quick break, and we'll be back with our market movers.